Okay. Officially, welcome out everyone to the Market Watch Group Weekly Market Prep. I'm Scott. I will be your host. We're ready to process. Last week, everyone's feeling pretty good. I asked, how's everyone feeling? And uh, taking a pragmatic approach. Look, it's going to come. We got to be ready for these things. We've got to be ready to transition into them, transition out of them, protect ourselves during them, get as good as we can reading conditions so we can be ready when the next set of conditions come. Okay. That sounds like a reasonable task. Here's the disclaimers. As always, remember, we're not brokers, we're not advisors. We don't give advice or recommendations. Everything we do is for education and illustrative purposes only. Today's agenda. As always, first and foremost, we want to go to the scoring. We'll look at what our scoring was, what's changing, and make sure that we have a comfortable set of understanding, set of circumstances for understanding market conditions. That's it. That's our top priority. Economic calendar. Yes, we want to know. We definitely hit confirmed labor market weakness last week, right? We've been saying, oh, could be this, could be that. We definitely got confirmation of that, which I'm convinced. I'm in the September club. I think we're gonna get 3 cuts now. I think we're gonna get September, November, December. And I think the market is showing the same thing. If you think I'm off, let me know where you think the flaw in my thought process may be, or the blind spot, if it's not a flaw necessarily. Sector searching. Actually, no. No, now is not the time to search. We search when the dust settles. Dust ain't settled yet. So right now, we're just trying to understand where's the most swirl in the dust, and no sound. Did it lose? We had sound, and then did it stop? I don't know. Is anyone else? Where are we at? Yes. Okay. I think it's just one person, and they just bounced out and back in. Awesome. Okay. So sector searching. Yeah. No, we don't need to search now because we're really just kind of waiting to see what happens as the dust settles. But we will do watch list maintenance now. If it's not a core holding, like a core stock, and I'm not going to say these are the core stocks. Everybody has their own list of core. Some things that when you find you trade them well, you stick with them. When you like the way they behave, you stick with them. If they're market leaders, that's the primary reason, right? There's just some stocks that we're always going to keep an eye on. Right now, though, I am going to start paring down my list and saying, okay, this thing's falling apart. Let's get rid of it. It won't just be today. It'll be during the week. We'll just be looking at our watch list, and all of a sudden I'll be like, this stock's really been struggling. I'm going to pull it off my list. That's it. That's what we're trying to do, right? We're trying to keep the watch list clean and tidy. Early week opportunity list, should say opportunity list. Apple now focusing on AI and not iPhones. Is that what the news was? I mean, AI is definitely the way to go. Does Apple have its own um, secret meeting? Oh, secret meeting. Have they announced? I mean, they seem to be so far behind if they're just trying to develop their own AI learning model, right? So You've got ChatGPT, who's, I think, the market leader. That's my favorite. You've got Gemini. Gemini does pretty well. That's Google. You've got Copilot. That's Microsoft. I actually am not a big fan of Copilot. And then there's a model called Claude, Claude. And that one actually, Apple Intelligence, they bought into ChatGPT. Which is weird because Microsoft owns half of ChatGPT, half of it. The AI development landscape seems to be blurred and incestuous, if you ask me. Right? Like, who's developing what and when? It's all good. I mean, I think it's all good stuff. The competition, it drives. It's just, I want those Ray-Ban glasses. I want them to have like with sound, and I want ChatGPT to become my Jarvis. Like from Iron Man, and I just talk to it. I'm just like, hey, do you see this? What does that look like to you? What does this mean? All right, let's get into it. Our posture. Where were we last week? Oh, they do have sound? Oh my gosh. Look at me. I've got to catch up. I need to have it in my ear. We need to have conversations. All right. So we've dropped 2 weeks in a row, and the thought was we're likely going to drop into the third. The question is, by how much? Now, if you are Graylin, you have Meta glasses. I am jealous. I'm jealous. Oh my gosh. It's like iPods. But I believe that it has a camera, so it can see what you're seeing. So you can be like, what is this bug that I'm looking at, right? Am I wrong? I don't know. I've got to get my Christmas wish list ready for some AI upgrades. Okay. First things first, long-term trend. First things first. Let's unlock the platform, which was already unlocked. Sundays are the funniest day sometimes on the platform. Okay, so we came off the lows. They came off the lows, but we definitely got hammered, right? Now, what does that mean? Where does that put us? Let's go 3-year weekly. Okay. I'm going to leave mine alone. I thought I was at a 1 3/4, and if I was at 1 3/4, I would have backed it out, but I'm at 1.5. And I think I'm okay with it still. We're technically a little bit below this line right here. Let me zoom in 1 click. I don't know. Do we drop it 1/4? I'm going back and forth on this one, you guys. That's the thought process. That's my thought process. Because theoretically, I don't have the last point. But if I draw this line here, I know my line is not looking great, and this line here, like that, I think you get a gist of it, right? I actually do think that's more like 1 1/4, and that feels more representative of what we have. What's the trend? the current score is 1.5 out of 2. So we're basically saying that the trend that we had been scoring, let me get rid of this, which is this and this. This is the trend here and here. That's what we had been scoring at 1.5. Yeah, you know what? I think I'm going to just take it down 1/4 point. Yeah. If it comes back in convincingly, I'll give it back. I'll be like, you can have this back if you're good. That's the way I'm seeing it. If you're good. Remember that what we're trying to do, those who are new, you do have videos for this, but just to give you a very quick understanding, we're trying to draw the trend first. So connect your dots and see what is the closest thing I can do. Then score the trend. That is a 0. That is a 2. That is a -2. So you're basically trying to, ish, right? Ish. And so you're trying to say like, that actually is probably too steep. That would be more like 3, 2, 1. That's more like the short term, right? We're a little bit different here. We only have 2 points. So that's why I'm saying, yeah, the trend is still up, but the fact that we broke the bottom side, I think I am going to just take 1/4 point away. Short-term trend. I keep starting to say this and then forgetting. The content library. If you go into Trader Resources channel and get to the content library, you will find a video for each of these components so that you can get a sense of what are we looking at, how are we scoring, what does it mean. Now I am looking at the short term. We dropped 1/4, then 1/2. Now what? Michael's already saying this needs to drop. I agree. We're not scoring now. I'm not going to do this and say this is a -1.5 or 1, right? That's not what I'm doing. When we have a bullish trend and it breaks, we start to score by deductions and additions. Buyers did this, they get 1/4 point. Sellers did that, they lose 1/4 point, right? That's what we're looking for here. So, how much do we drop it? I'm seeing a lower high, right? So I'm going to say it should lose 1/4 point for that. And, unfortunately, we got a lower low as well. Now, the good news about the lower low is if it stays in this area, it won't get scored again next week. Once we score the lower low once, it's scored. That's it. Now we're done. So this is saying, yeah, I agree with you guys. And I think we take 1/2 point. Give me your thoughts on that. Those of you who dropped yours, did you drop it by 1/4 or did you drop it by 1/2? I'm going to drop mine 1/2. It's not looking good so far. David says 1/2 makes sense. Sandy says only by 1/4. Okay. 1/4. That's fine. That's fine. Nope, not 0.53. Although it's your score. If you wanna put 0.53, it's your prerogative. We'll put this as blank for now. Now here's the deal. One of the things we do in our volume is a sanity check, and you're gonna see the sanity check is not looking in a good place, right? We definitely want to be careful. with what we're seeing going on right now. Volume. Let's go to 1 month daily. So at this point, we have these two above. I can hardly see that. Let's go pink and let's make it just a little bit bigger. We have this here. These two basically canceled each other out. One up, one down. Then we have these here. 1, 2, 3. Now, the problem with this is we went from here to here in 3 days. They were all above average, but I'm only going to give it 2 points. Why am I only going to give it 2 points? Because I don't see 3 big smashing days down. In fact, the third day is the one that was really kind of iffy. So I'm going to give this one 2 points for those 3. And I'm going to say we had a selling. That's 2 X's. That's what that is. 2X, that's an X, that's an X, that's a check. That's a check, that's an X, that's an X. 2, 3, 4, 5, 6. So we now have 6 selling days, 2 buying days. It's not worse, but it's not better. That's how I see it. I'm going to leave my score to minus 0.75. Any thoughts? Now, let's sanity check it. There's the starting point for this analysis. There's the ending point. Where are we? Yeah, we're definitely negative. Minus 0.75, I think, makes sense. Here's what's hard. All of this scoring, the only scoring that might disappear soon is over here. And this canceled itself out. So all of our negative scoring is going to be with us for at least a negative week. So you might be thinking, oh, this is going to we gave what 3 last time? I don't know what that means. 3 buying days last time? We could. I just did the math prior, right? I mean, if you want to call it 7, if you want to give it 7-3, the one you gave 2 negative. Yeah, I'm ambiguous. Be water, my friend. As I looked at it, I saw that it just didn't decline enough to be worth 3 negative points. I don't think it'll change the score, though, right? I don't think it'll change. Would it change your score? Let me ask you that. Yeah. If you find that sometimes I'll, from week to week, be like, whoa, last week I said it this way and this week this way. You're right. Is that inconsistent? I mean, I don't know. Maybe. Or is it just adapting? Be water. Be water. You see it differently, say it. You would lower it. Okay. I'd see, for me, that would put me at a -1. That's the lowest it gets. And I know for a fact this is not as bad as it gets. I've seen 9 selling days and 0 buying days. That's what a -1 looks like to me. I'm not going to begrudge you if you're ready to move yours down a bit because yours wasn't. But for me, the fact that I've already scored it at a minus 0.75, I don't see enough to say this is as bad as it gets because I just don't think so. I love the discussion today. I hope you guys see why these discussions are so so helpful. Happy and helpful. They're both, really, when you think about it. It allows us to I want to process this. right? I think I would be fine. Although I could tell you a story of how I provably demonstrated I'm a better trader when I coach than when I just trade alone. I mean, I haven't tested that in over a decade, but I still trust the results. I want to process. I want to talk about it. I want to be like, wait, what about this? Am I seeing this? That's why it's so helpful to be able to come into the group and just kind of bounce it off. I have a feeling this one is definitely going to change. Major market. Because we ended up at a 1, and it's like, whoa, I don't think that the small caps held up. Okay. Yeah, now you can see what happened. As we come back down, you'll notice there's the Dow. Why can't I get this? There it is. Oh, there it is. The Russell almost gave it all back. Still a little bit ahead. But I'm definitely going to drop it back. You can see there's the NASDAQ is still barely on top. I mean, it's this is a tough one, right? The NASDAQ is still on top. Everything has given it back. Did you guys see that they declared the NASDAQ has gone corrective, meaning it's now more than 10% off its highs? Something we've been talking about. Let's go down to 133. Yes, all took it an equal dive. That's a great observation, right? Did somebody lead, or was it all just sort of across the board? Across the board. So it's what does it mean if they all took an equal dive? That means that they it was broad based, not a shift, right? If the Dow, well, so this is just, remember that nothing's being figured out here except a starting point and an ending point. And as we see the starting points and ending points and where it puts the different components in a relative positioning, it helps us to understand where the money flow is. And so for us right now, as we look at this, we're saying if the Dow didn't drop, although if you notice the Dow didn't drop as much as the others from a percentage standpoint, but it's still lower than the others from a relative standpoint. If we see one dropping but others not, then we think it's rotating money, and then we can interpret it based on what the direction is. So if money's flowing out of small caps and technology and into the Dow, we're going to say that's defensive. That's more negative. If everything's flowing out of everywhere, then we're going to say that's just market correction. That's just the whole market kind of pulling back. There's no extra interpretation to that. That's what it means. So I agree that it all took a dive, but you know what? I honestly, how do we factor in hedging by the big guys? That's our VIX score. And remember that the VIX score, right now we've moved to our 1-pointers. Let me show you what I mean. Such good questions. My God, I love this discussion, you guys. So 2 points for long-term, 3 points for short-term. So 5 points out of 10 for trend on purpose. Trend is half. But more is oriented to short-term than long-term because we trade the short-term. Then we have these 3 1-point components. And it may feel like with just 1 point, they don't, it's uncanny how they contribute in a positive way, whether it's positive, like, I don't mean positive like a good for the market, but positive like it helps us to see when things are transitioning. So we have 1 point for major market, 1 point sector rotation, 1 point for volume, which is our conviction. And then we go back to 2 for the VIX because it definitely has that importance. So great question. I've had people who have changed the weighting They're like, you know what? I like this better. Great. It's your trading. You do whatever you want with it. This is a starting point. If you like it, keep it. If you want to change it. I was joking around when I accidentally typed in 1.03 or whatever I put. I tell people, you don't have to move in quarter point increments. If that doesn't represent what you see, put what you see. If you want to score at 1.679 because that's what it looks like to you, it's up to you. Okay. Same orientation, Michael says, and that's kind of what we're thinking about is, does the orientation cause a shift? Yeah, I just can't score it a 1. A 1 is like, look, there's clearly money flowing into both, but money's flowing out of everywhere. I'm docking it at a quarter of a point for no other reason than money's flowing out. that might be the only reason I need. It's not a... Earlier when we saw small caps, it was because we had said, hey, when small caps get into position, we like that. They did it, right? They did it, and we scored it, and now we're like, well, wait, is that money flowing right back out? And it certainly seems like it. Now, keep in mind, Bob, one of the things that we're doing, it's interesting because these have all finished in relatively the same place as we've moved from 200 days to 133 to 66. What we're doing is we're changing the 0 point. Everybody starts at 0. So right now, 66 days ago, they all started at 0. And then we say percentage-wise, where are they? And it's interesting because look how close they all are, but look at the different journeys they took to get there. It's very interesting. And for me, I'm saying overall, I still have small caps and NASDAQ in the lead. Everywhere but maybe here. But I score it at 66. If I can't score it at 66, then I'm going to use the 22-day to help me. But I can. I'm going to take a quarter point off. I'm going to drop it a quarter point to 0.75. Now, what do we see here? Here we see the NASDAQ selling off the fastest. Yeah, that makes sense. That makes sense. We see that the Russell's still leading, but it's only leading because it had such an enormous surge around the Fed news that came recently, right? So, yeah. I am going to drop it. I'm going to drop it a quarter. It just is not, it doesn't warrant a 0.75 if everything is dropping. Or excuse me, it doesn't warrant a 1. Okay. Oof, it's kind of... We were wondering if last week would be our stability week. It clearly wasn't. Now the question is this week going to be our stability week? We saw something very similar back here. In fact, back here we dropped 5 in a row. 1, 2, 3, 4. No, let's see. 1, 2, 3, 4. We dropped 4 in a row. We dropped from 6.75 to 6, then to 5, then to 3.5, then to 2.75. So 3 quarters, 1, 1.5, 3 quarters. So you can kind of see it went 3 quarters, and then it went 1, and then 1.5, and then it started to slow down. Okay, good observation. So here we went 3 quarters. This is 1.25, so it's still speeding up. It hasn't started to slow yet, has it? Because we still have 2 more scores, and it's probably gonna be at least that much. What am I looking for? I'm looking for if the drops, right? So if next week it stabilizes, that's good information for us. We were hoping it was going to be this week. It didn't. Okay. We adjust. We keep going. Sector rotation. Same analysis, but now with the sectors. Okay, so let's see what we have. Where's the money going? Sandy wants to know. And I agree. Same thing, and it you can always see it looks ugly when it dips. Financials have dropped in. I mean, down in here in this grouping, We still have financials, we have technology, we have communication services, we have utilities, and industrials. All growth plus utilities. Utilities is the defensiveness. Right? And so then we have staples picking up a little bit. You can see here discretionary down, energy. It's a tough read. All right, let's go in and see what happens. Let's see what. 2 days? No, that's not helpful. 133 days. That's helpful. 133 days. Utilities is on the top. Energies near the top. Financials. Then down here we have industrials, and you'll notice on this time frame, technology is falling back to the bottom. Now you might be thinking, oh, that's catastrophic. It's not. It fell to the bottom right here in April too. And coming out of that, that's our pattern that we love right there. I can draw it anywhere. Up, down, up, higher, low. That would have been such an amazing time. Yeah, such an amazing time. So I'm not trying to call the bottom of this, but what I'm saying is when we see technology give us that pattern, we're going to be pretty happy about that. It's not yet. It's not yet. But we know what we're looking for. That's helpful. Okay, let's go to 66 days. That's probably one of the biggest things when we move into this type of a situation. Individual traders tend to be late to move into defensiveness and then late to move back into the market. So you get beat up a little. Oh, I thought you meant my drawing. You mean this chart? I thought Sandy was saying that my drawing looked like a 3-year-old crown drawing. And I was going to say, Sandy, I've really worked hard over the years on my chart drawing. I consider it chart art. But then I realized you must be speaking about the automated colors. Anyways. Sandy, I'm going to have to write you a strongly worded email. Okay. What does this tell us? This is our scoring. This is our scoring time frame. What does this tell us? I don't know. You tell me. I'm going to let you guys score it because I don't want to. It looks hard to score. It looks hard to score. Technology's pulled back, but communication services is holding up. It's staying up, right? Meta, come on. And then we have some defensive. It's coming down. Our score is coming down. Financials is still trying to move. Discretionary is holding up. What were we? Nope, that's not it. We were a 0.5. I don't know, actually. On this time frame here, with financials and communication services still like pushing, I don't feel like we shifted down yet. Energy's still down here. Industrials is down here. Staples is just kind of on the 3-month. I feel okay. I'm going to leave it alone. Did anybody change theirs? And if so, to what? Leave at a 0.5, Bob said. I don't see anything that fundamentally says take a 1/4 point away from it. Steven says holding his. Go to 22. Okay, I feel like I'm good scoring it on 66. Let's see if 22 does anything to shift. So on 22, we have financials and utilities, with financials ahead of utilities. I'm okay with that. Then we have industrials. and materials. Healthcare, yeah, it's a bit of a mixed bag, right? It's a bit of a mixed bag. Communication services may be trying to bottom already, and then we're watching these two very closely. If communication services, not the decider, I agree. If communication services and technology give us a reversal, everything else shifts to that. I will even if it hasn't scored more favorably yet, I'm still going to have that. Oh, I think I got tracked back a couple of days. You're right. When I switched to 22, let me go back. I don't know why it did that. Let me refresh. When I switched it to 22 days, and this can make a difference. So that's a good call out, you guys. And this is something to make sure that we're looking for. If this ends up a couple of days back, right, I can go back and I can trace this. So I need to make sure this is pulled all the way. Oh, wait a second. Miguel's saying I might be wrong on my 66 days. Ooh, he's right. Oh, I didn't see that happen. That's a great catch, you guys. That is a great catch. Let me reevaluate with utilities, comm services. They're both still up there. Yeah, I'm gonna drop it at 1/4 point. I'm gonna drop it with 1/4 point with utilities. With technology having fallen down and utilities having moved up, that's you guys are amazing. What an amazing group. And some of you are new. I want you to notice how you're catching the subtleties and the nuances of the analysis to recognize and catch that. Amazing. And now I can tell you the truth. It was a test. I didn't make a mistake. I set it up as a test to see if the group could pass we did it. You guys, congratulations. We can all feel good about what we've done here today. So I'm just saying. Yeah. We can all pat ourselves on the back for a job well done. Sector rotation drops thanks to Stephen and Miguel catching that the time frames needed to be pulled to the right. That actually flags. Bob failed. Okay, Bob, we both failed. We'll hold our heads down in shame for a few minutes. Okay, VIX. David's been waiting patiently for me to talk about the VIX. He wants to know what the hell the institutions are thinking, and so do I. Let's go see. Let's talk about it. David said yes, because look at that. Like, that seemed disproportionate. Am I wrong? That seemed like I was having a hard time as I watched that on Friday, because I'm like, really? Such a panic when the market just didn't end up giving it back like that. But whew, my goodness, this is the kind of thing. So it's interesting because I think sometimes we have almost an inverted read on the market, like a contrarian read. I actually see this as a little bit positive, and you guys are like, holy crap, how do you see that as positive? Because I think it is too much. This is the kind of thing where if we open up on Friday and we have a bit of a recovery, or on Monday and we have a couple of days and it comes back like this, and then we have like 2 days down and the market goes like this, and then it starts to go up again. What do we have? De-escalation. Panic and then not maintainable. Exactly right. Right? It's not going to sustain the panic because people are going to realize, oh, yeah. The smart institutions that we try to read are here. That's who we're keying in on. These institutions, it's a funny thing because sometimes we think, oh, their institutions are all smart. False. There are plenty of just terrible institutions. That's a bad assumption to make. We care about the good ones down here that are getting in at the good time. These guys who got in down here are getting out over here, that are selling theirs. They took advantage of selling when it was up here. Like, they booked some great gains on those hedges that they made. They weren't going to sell their stock anyway. They're institutions. They're long term. They just buffered a little bit. But some of the institutions are not. And so when we score this, we have to score the fact that it's a higher low, right? Like that happened. We focus on these peaks and troughs. And in fact, one of the things that's been happening is we've actually been saying peak, trough. Like it's just been, that was real difficult. So if you're like, gosh, Scott, I'm having a hard time reading that. Me too. Just because we know to look for it and we know how to read it, that doesn't mean it's always going to be easy for us to read. Sometimes it's just like, holy crap, this thing is whip. Welcome to the market. This is what we're contending with. However, I want you to realize that since this point in time when we broke, we've been much more defensive. Like, oh, did we take a couple of bullish trades? Yeah, but a couple of bullish trades. Now this thing whipped up. My thought is, even if we have one more day, that's the kind of thing that can move into like this, right? So if I go back now, and you can see there will be times where we'll bleed that vol out real quickly from the high. And if I go back to 1 year, same kind of a thing, right? Where if you look, it pops up, down for 2 days, up, and then bammo, right there, right? Let's switch this back to the market. Oh, what is that little blip that we see here signify? Boy, that happened right near the bottom. Right near the bottom. I'm hypothesizing and it may not. Oh, exactly, Michael. Remember how many hypothesizings I want to do. Minimum of 3. I need 3 potentials when I walk away on Sundays. I want to know, A, what I think is most likely to happen, and how will I trade because of it. Then I need hypothesis B. What would that be? And what would I do if that's the one that shows up? And then I need hypothesis C. What would that look like? And then how would I trade if that shows up? Because if I only have one version of being right, it's going to be a whole lot harder for me to be right. You want to be right more often? Have more than one idea of what it's going to look like to be right. Yeah? So we can shift more fluidly and adapt. We already have an idea. So yes, I'm always going to walk through like, oh, it would do this and then this and then this. And it might seem like I'm playing it out, and then I'll stop and say, but that's not what I think's going to happen. That's what might happen. Yeah? What else might happen? We might just dump, right? We could just sell off a little bit more. There is no correlation with the VIX in March to the VIX now. Let's go take a look. Let's take a look and see. So our VIX was 1.5, 1.25, 0.75, 0.5, 0.5, and then back to a 1. And now if you look at what's going on, 1.25 down to a 1, down to a 0.5. I think there's a lot of correlation between what happened then and what happened now, right? Back then, when it was a 1.25, our score was a 6. And right here, our score was 5.75 and 1.25. That's very much correlated. Very much in line. Yeah? Only looking at March. But in March, the market was still going up. It wasn't until April that things took a hit, right? It was April. So now I am going to drop this 1/4 point. So you can actually see here that we went from here to here. That was 3/4. We went from here to here, 1 1/4. Here to here, 1.5. Yeah. No end in sight yet. Looking for this week to stabilize. If this is going to be a consolidation where we have just dropped that 5%, then I would say we didn't get it. We need to see next week. Now, if next week we only, even if we dropped next week, let's say next week we dropped 1/2 point. Yeah. Look at the trend. 3/4 point, 1.25, 1.5. Now, if the next one goes 0.5, then there is signs of stability. If it doesn't drop at all, signs of stability. If it goes up, it's signs of improvement. So that's what we're looking for. Right? Looking at the VIX as high as it is now compared to the peak. Are you saying like higher high and higher low from like you're saying like these broad ones? Yeah, that's less. I mean, if you notice, we're at the same place we were when we got to this point. When we got to this point here, the market was down 10%. 10%. Looking at the top, I'm not sure the correlation you're making, Stephen. I apologize. I'm not sure the implication that you see. Yeah. Okay. So, what is the bottom line? Our score dropped. We're still ever so slightly in positive territory. We haven't even dropped to neutral yet, right? And that's expected. Okay. So what does that mean for next week? That means you're going to tread lightly. There's too many stocks that have moved into consolidation patterns. We don't need to force trades right now. Relax, let it finish playing out, and then we can move forward from there. Let's pop into the watch list. What an amazing discussion today. I want to thank everybody for their contributions. Trading is there it is. Michael summed it up. Trading is going to be more difficult. Maybe not. I mean, yeah, put difficult. Right? It's never easy, but it's going to be harder now than it was. So, great. Set expectations appropriately. Let's move this to here, and let's go through our watch list. Apple. I mean, quite honestly, Apple still has like a reasonable amount of bullishness to it. Like, I would still I would still consider this valid on my bullish watch list. So I'm gonna keep an eye on it. Amazon got beat up. Nothing there. AXP financials are getting beat up. You can see we're going to have to wait for dust to settle. Bank of America got beat up. Glad we took a loss early on that one. BLDR down. You can see, look at Citigroup. The financials just got busted in the mouth. Great. Okay. That's information. So we had false breakouts in the industrial section. Yeah, this puts us in a different place. Carnival Cruise, look at how fast. I mean, things got rattled. Does that mean that we're going to move into a bear market? Not even close. Not even close. But that's what happens, right? Oh, look at Colgate-Palmolive, still looking so strong. That was one that we traded. I don't know. Oh, it was earnings. That's why I missed the next trade. I know exactly why. Because of earnings. I'm like, why did I miss that? CMG, I'm putting that on my list, you guys. If this holds up, this is the pattern. Boom, boom. If we hold and turn, this will come down and turn. I'm going to pull it. You'll see it. It'll come. Costco, not quite yet, but Costco's holding up. That one could turn around quickly. Sandy likes Costco. I like Costco, but I do want to see it. I do want to see it still kind of make that pop, pullback, ready to go. CSX, it's got earnings. Nothing we can do with that. Carvana looks fine. So I want you to notice Apple and consumer. We're finding strength. Okay. Here's the Dow. That's holding up. Fastenal. Same thing. We caught, it moves, and then it turns, and it's still holding. I'm actually going to keep that on my list and keep an eye on that. Bitcoin back down. Nothing there. Gold, it's overbought though. So if you were trading in materials, then here you're probably going to want to be, thinking about, do I come out of it? Would I trade against the posture? Okay. Well, what do you feel would be trading against the posture? That would be the question. Because right now, if I'm a 2, I would actually say I'm moving closer to where I could trade bearishly for balance. Can I explain why an April 16 date gives a 0 at this time frame already for an entry price? I'm not sure what that means. Like, are you looking at a specific stock? What entry price? Where are you seeing 0? Give me some context on that. I don't have enough information, I don't think, to answer that. General Motors down, nothing there. Google down, nothing there. Home Depot, okay, holding up. Consumer, IWM pulled back. Cigarettes are actually doing quite well. This is Philip Morris. That's cigarettes right there. People like to smoke when things get I guess. Where am I? Home Depot. Small caps. No. JP Morgan. Yeah, the financials really, really got put into a tailspin. KB Home still looks okay. There you go. Yeah, if you're looking at options, that might be it. That's a good call out, Michael. There's Coke. I like Coke. It just needs to pull back. There is some defensiveness there. I like Meta. I'm putting Meta with Apple. There's a couple, and they are leaders. It busted up to the upside. It's pulling back. If it can make a higher low, I'm still in. Let's see. Okay. Flag building, I would say that, yeah. Yeah, there is not necessarily a flag because it's, I mean, it's really 5 days straight across now, but that same kind of a thought, right? The buyers have potential here, or the sellers have the ability, but there's just nothing happening right now. Okay, what else? Let's see. Morgan Stanley getting beat up. Microsoft getting beat up. Micron. You can see a lot of things that we're waiting for stability. There's no reason for us to rush. When we have stability, right? NVIDIA in consolidation. This was a new one, Oceaneering, but it got smashed right back down pretty good. So we're just still a little bit waiting here. Okay, patience indeed. PLTR. I told you that was one that was holding up when the rest of technology was not. And I said that one thing that we want to make sure that we do, don't buy the last nice house in a bad neighborhood, right? That's not helpful to us. Qs are down. SPY is down. TJX. There's not much. We have a few things in a few areas that we're waiting on, but everything else we're waiting. Now look at the dollar. The dollar looks helpful. That's helping. Okay. VIX is still elevated for sure. Let's see where Walmart is. I'm still going to put Walmart on my list as well. Couple of technology, a good amount in consumer discretionary. Now, we also want to think about staples, and we want to think about utilities. Now, utilities, though, for me, is one that I am I would be willing to trade XLU, but I'm not looking to pick individual companies. Okay, now this is the last week before we restart. So for anyone who's come new within the last month, We are on section 8 of our trading plan. If you haven't downloaded yours yet, make sure you go download it. We definitely want that as soon as possible. Yeah, we definitely want that as soon as possible. And then you can start getting work in on it. So if you are going to cycle with the group, we're going to start over on section 1 next week. Personal information. This week, we are going to finish with goals, improvement strategies. You don't have to have a full trading plan to start setting some goals. You could start here. You could definitely start working on some goals here and then go from there. So yeah. Join us, work on this plan. Yeah, that'll be super super helpful. So over the course of the week, Bob, that's kind of like, so this week this is something that I would hope that as you're working on your plan, these are great things to bring with you to the trading session, the working sessions Tuesdays and Thursdays. In fact, as I think about it, I should bring it up more, just to be like, hey, does anyone have any questions on and I'll mention it to Glenn as well, so that we bring it up, so that if you're working on the section, that can be where you say, hey, take a look. I just posted. There's videos in the resources. Thank you, Sandy. And if you go into the trading resources to the bottom, I posted a full sample plan. If you want to go in and see, like, hey, what is Lee's not here today, but I know Lee's been working on his. He said he found it very helpful to see it fully fleshed out. So go take a look at that, because I think you'll find that helpful as well. Yeah, definitely. Any other questions? That's what we're working on, goals this week. And then next week we're gonna start over. So that's what's happening. All right. Okay. Great discussion today. I mean, I know that the market's not in a great place, but I feel like we're in an okay place. I feel like we've talked about it. We've addressed it, right? We have at least some measure of a plan. Yeah. The final posture scoring. That's a great place for us to end up. Let me pull that up right now. And that's where we finished up right there. So. All right. It's good to see everybody. Remember that we are going to be right back on tomorrow morning. Tomorrow morning at 15 minutes before the market open, 9:15 a.m. So I will see you guys tomorrow morning, and have a great rest of your Sunday. As always, happy trading.